Joining me now is Trent Mell, President and CEO at Electra Battery Materials. Good to see you again.
Thanks, Mark. Good to see you too.
Lots to get updated on, and not the least of which, the first thing we'll delve right into is this $20 million U.S. Grant from the U.S. Department of Defense. What are the terms of that grant? Any restrictions on it? And what's the overall significance and the commitment that they're showing here?
So the restrictions is the easiest. There are none. I mean, this is basically, you look at it from the lens of a shareholder, this is free money coming into the company to help build necessary infrastructure on the continent. And so the premise of this goes, you got to go back to 1950, the Korean War, when America realized it wasn't sufficiently prepared for the war effort. So they passed the Defense Production Act, which allowed them to invest into Canada as an allied state, treating them almost like a U.S. state, with the view that, you know, if we need nickel or steel or supplies, Canada will be there for the American war effort. And so using that legislation on a sort of fast-forward basis, critical minerals is in the spotlight, obviously. Concern over China, right? We've seen cutbacks, curtailment of rare earths, semiconductors, PPE during COVID. And so this criticality of trying to onshore the battery supply chain as we develop this industry is at the forefront of this grant. And so we are the first brick and mortar investment up into Canada in a long, long time. And honored to be so.
Very exciting. Something else the company has announced is a letter of intent with Eurasia Resources, whereby starting in 26, they're going to supply cobalt hydroxide. This is feedstock from the Democratic Republic of Congo, DRC. Before people get up in arms about that statement, there's a certification process whereby this is similar material to, say, something that Apple would buy or Tesla would buy. So could you explain that?
Yeah, sure. I mean, those who follow mining may remember, if they're old enough and got some gray hairs, the blood diamond trade. I think that was back in the 80s, where we figured out a way to clean up the supply chain, right, from war-torn areas and tracing of diamonds. And cobalt went through its own issues in 2017, where we child labor price of cobalt spiked. We weren't quite sure where the material was coming from. And since then, the biggest miners in the world of cobalt, that would be China, Mali. So that kind of keeps them off to the side for Electra, for our North American purposes, but there's also ERG Eurasian, as you mentioned, and Glencore. So those are the three biggest miners in the largest cobalt market in the world. And if you're going to be putting cobalt into batteries, it almost all comes out of the DRC, just a function of how it's mined. Most of that goes to China. We're obviously going to redirect some of that now to North America. But as a condition, we've got a supply chain sourcing policy that says anybody we deal with has to abide by the Responsible Minerals Initiative, the RMI, which follows OECD sourcing guidelines. And so much like the cleanup of the blood diamond trade, cobalt does have a framework, and we follow it. You know, Glencore and ERG do, the Teslas of the world and Apples, and so we've coalesced around a standard. And bottom line for us especially is only deal with the biggest and the best. There may be some good co-ops and artisanal mines, but we just can't risk going there. We need a really clean, transparent supply chain for our batteries.
There was that movie with Leo DiCaprio that I never saw, which I think was called Blood Diamond. I don't know if you ever saw that.
No, I did not. I'm familiar with it, but yeah, same idea.
Right.
It was a Wild West for a while, and the DRC had its own issues with tin, tungsten, and tantalum. There was some U.S. legislation, and that's in the northeast of what is a really big country. So as the cobalt price spiked to almost $50 a pound, some of those practices migrated down to the southern part of the country into the African copper belt. And so that's what we've been cleaning up, I guess, ever since the 2017-18 expose on the practices.
Now, Electra is planning to be in production in 2026. You're advancing this plant in Ontario. You put it on pause last year. What's the latest on that, and have market conditions improved at all?
Yeah, so we were probably one of the earlier midstream facilities to actually go into construction. We were actually one of the earlier ones to stop as well. And you started, I mean, we had all our engineering and design work was done during COVID and lockdown, and then once the world economy opened up again, we started our long lead fabrication around the world and started bringing supplies in and construction. And all the while, the inflation wasn't the inflation you and I were facing. The project costs were astronomical. Freight was 2 and 3 times higher than we had quoted. Stainless steel was up 40%, so on and so forth. And so put the brakes on. We're working, the DoD was the first piece of our financing puzzle here that we're finally implementing. But in the lead up to DoD and other funding sources that are not yet not yet finalized, we've started to work on revision of our CapEx and our schedule and our execution plan. We'll be hiring a lead construction manager soon. So we shrunk the team down, we kept the core group. You're going to see us start to grow that, and a lot is going on at site right now, kind of behind the scenes, to get ready for a full funding outcome.
So you've said you still need 60 million US or so, and you want to get that through non-dilutive funding. So what kinds of groups are you talking to?
Yeah, I've been pretty consistent with that our first choice is government funding programs and strategic investors. We've got debt already, debt-like stuff, traders and whatnot, maybe that comes into play a little bit, but the equity markets are not favorable for junior miners, although we've had a great response to the DoD news, so that's kind of a last resort for us. So DoD provides a third of it, right? It's 20 million of the 60 US that we need to complete. There are other government programs that we're talking about. I won't say much more than that, but great to have the US fund into Canada. One might expect there'd be a follow-on to that. And then the strategic, we've got a couple, we've even got term sheets. We've got some pretty advanced discussions. And as the government piece falls into place, a strategic could come in behind that, and then we'll find ourselves in good position. So on the one hand, you might say, geez, you only got 20 out of 60, but I'd say, stay tuned. I'm feeling very good about the pieces coming together. The U.S. government had to be the first piece because it's such a monumental development, right? U.S. grant money coming into a foreign nation. We've had inbound calls from around the world. Jane's defense publication to ESG funds to the Middle East. So it's starting to capture the attention of, okay, here's an asset the Americans want to see developed and de-risked as a counterweight to Chinese dominance of supply chain. So I think it'll come together quite nicely.
Right, it definitely adds to your legitimacy, doesn't it?
Yeah, it does. Like we've always been that company that sort of Boy Scout of the IRA, right? We want to do things right. We want to help with the onshoring effort, and we've got, you mentioned Eurasian, right? So our supply of feedstock in is locked up, locked and loaded. Our demand for the product out is oversubscribed. It was always about capital, right? So we're competing against China. The subsidies there are extremely generous, and even when you got to borrow, you're borrowing at about 3.5%. Here, you'd be happy to borrow at 13.5% as a pre-production company. And so it isn't a level playing field. It's not a free market. And the U.S. government, whether it's DoD, DOE, state, they understand that. And they are kind of leading the charge for the allied nations to say, look, we've got to fund the construction of the supply chain. They've got to be able to operate on their own and stand on their own 2 feet and be efficient. But capital formation for a startup is exceedingly difficult. And that response that we've seen, I think Electra is I would say the first of more to come in that regard.
As far as future production, LG Energy Solutions is signed up for as much as 80% of that. You said you've got double demand for the rest of it, the rest of the 20%. Can you give us a sense of, we don't need names, obviously you wouldn't give them to us anyway, but give us a sense of where that demand is coming from, what kinds of groups?
Yeah, when you look at the cobalt chemical market today, 90% of it's out of China. And when you start to look at the rollout of the Inflation Reduction Act, there's kind of a phasing in of certain rules. And so for particularly U.S.-centric automobile manufacturers or sales, there's a $7,500 vehicle. Half of that is premised on sourcing from the U.S. or free trade agreement countries. And as of next year, you have to have zero China content, China, Russia, foreign entity of concerned country content in order to qualify for those vehicles. And so the demand is for anybody that wants to sell into the U.S. and is eyeing that $3,750 credit, half of the $7,500, is knocking on our door. So it is battery makers, it is OEMs, and traders as well. So Michael, our VP Commercial, would tell you we're comfortably 2x our production. LG's been a great partner, so they'll be the backbone in our first year of operation.
And then with the black mass demo, which you did at your refinery, finished that several months ago. You said you learned a lot. So is Electra currently refining any black mass? What were the next steps there?
Yeah, quietly we are actually. We declared it done, and then we decided to do a little bit more. So we had great success with our leaching of the black mass, and then our purification steps to separate out the products. It was a batch process, so we got a $5 million grant from Natural Resources Canada back in May. With that, we want to take this process to a continuous operation. You'll learn things. It's a less controlled environment, so you get to understand how the processes are going to react in sequence. And then I want to work more on lithium. We are exceedingly close to a commercial or technical grade lithium, but that's a game changer for us. And so we've been doing some work in the lab. We've quietly done a little bit out in the field as well, out in our plant. And then lastly, the nickel and the cobalt, we sold it as a mixed hydroxide precipitate, or an MHP, intermediate product. We can split that off into final downstream saleable products that have a higher margin. So as we work on all of that, we are able to take our time, but do it right. Let the market here in North America for scrap batteries and black mass mature while we pursue the cobalt plant. And then when we are ready on black mass, we can do it at scale with a stronger balance sheet.
Let's talk about the electric vehicle market. There is the sort of maybe not a consensus, but a feeling that, it's slowing down, which it has, and certain companies, OEMs, have pulled back a little bit on production, et cetera. But it still seems to be growing at 20% annually, looking at North American numbers. What's your view of the current EV demand of the market itself, and Cobalt's place in it?
Sure. Yeah. Two different related questions. On the sales side, Q1, Tesla, GM, and Volkswagen, I think, were down quarter over quarter. The other 11 producers were all up. Hyundai knocked it out of the park, amongst others. And so, slowing, sure, but 20% growth is still pretty good, right? There's a net. Total vehicle sales are flat. The market's still growing, just not at the same rate. 20% this year. We're projecting 38% next year, 39% the year after. And quite simply, you can't keep growing at that rate anyway. Like we're 14 million EVs sold last year. We keep growing at 20%. You're over 100 million vehicles by 2020, 2035. That's bigger than the whole global fleet. So it's got to slow down. But the important thing is the trend is right. On Cobalt, of course, people in the space will recognize you've got nickel-rich batteries and the LFP, the lithium iron phosphate. LFP typically is a developing market product. You can do it for shorter range vehicles here, and it's cost-effective, not very recyclable. So if the ESG question, end of life for those batteries, is tricky, doesn't perform well in cold weather. And so the Western world, particularly North America and much of Europe, is going to move towards or stay with the nickel-rich cathodes. But even then, there was talk 2 or 3 years ago, we're going to engineer cobalt right out of the battery. I can tell you firsthand, the Koreans are migrating back towards a mid-cobalt, so kind of 60% nickel, 20% cobalt loading, 20% manganese. That's a good equilibrium, because now cobalt's stabilized, everybody's comfortable with the commodity and its properties in keeping the battery stable, and controlling heat propagation are just too important to thrift any more out of the battery.
Right. Lastly, Trent, the ultimate vision of Electra Battery Materials is to be the greenest producer of cobalt in North America and a counterweight to China's dominance with that metal. So how do you see the future catalysts against the backdrop of the overall investment case for Electra?
Yeah, when you look at the gaps, and we're building an entirely new supply chain, right, for batteries around the world. This midstream that we operate in refining is one that is getting very little attention. Lots of battery plants, over 30 battery plants announced in North America, and how are you going to feed them? And so cobalt for us is just a start. We've got the luxury of a pre-existing facility that we're expanding, and it has permits, and the idea would be, let's get the cobalt going, but not stop there. We've got an opportunity maybe to do it again in Quebec, similar flow sheet. Recycling, of course, would be the next one. That market of battery scrap is going to be important, and we're working with some Indigenous partners to collaborate on the collection and shredding of those batteries. And the big prize is nickel. There's so much nickel in a battery, and there's such a gaping hole in the supply chain here that kind of a 5-year vision would be to advance our nickel refining plans. And we're already having some early talks. These things take a while to implement. So I would say most of the team's effort has to be on getting to cash flow on cobalt, but we're carving out enough time for the R&D on recycling and a longer-term game plan with multi-facilities around the continent.
Great update. Thank you, sir.
Thank you, Mark.
Okay, Trent Mell, President, CEO at Electra Battery Materials.